Welcome to TradeTheNBI.com. This is John's report is for the 8th of August. Some would call it another wild ride. I think it's just a continuation of the downtrend. We said there would be fits and spurts to the upside. No shock with that. NBI White was still leading in the situation, though you had Magenta slightly above, and we never got that crossover of steel coming back below cyan. So that maintains the short in its configuration. And anytime you see orange between cyan and red, you have continuation. So we're going to get continuation of the same, which will be back and forth movement, but the extreme nature of it is pretty wild. Now, of course, they're going to claim that it was the horrible 10-year auction, blah, 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 nonsense. The reality was they saw credit from consumers taking a major hit and auto loans being stagnant. The only thing that was up was student loans. Well, yeah, that's not sustainable. We already know that one, especially since they keep forgiving student loan debt. Crazy stuff, but that's the reality of the market. And this is where I've been telling you the bond market is completely messed up because they're completely absent of what's going on in reality and no way to get it in line. And from this standpoint, we're at minus 17 on the DOC red. That's not enough for an automatic reversal, though the shakeout is reasonable from a ES standpoint, but not so from a NASDAQ standpoint. If we look at the NASDAQ, it's a completely different setup here. You have much stronger short configuration within that, and this separation, bodes for continuation on that. And as well, you have a similar DOC reading, so it poses problems. We're not in congruence with the markets, which means there's constant rotation. This is part of that election situation that I was saying, that there's still so much uncertainty now as to how things are going to play out. And this ridiculousness of the bond market, I mean, they're way outside of where inflation is. This is all negative yield territory. So who wants to buy bonds? Why would anyone be surprised that there was a poor auction and the yield climbing, back up, and it's only going to get worse from that standpoint. The Bank of Japan capitulated. They thought that would be enough to sustain things. It is for a little while, but then you have the broader global situation of, the potential conflict where, they hear reports of, Egypt saying don't be in Iranian airspace between certain hours on Thursday, this, that, and the other. Yeah, there's a lot of difficulties out there. And then you have the expanded new front in the Ukraine war where they seized natural gas portions in Russia, and that threw natural gas prices for Europeans. So, yeah, you see what that did with oil set up there, because in the broader context anyway, uh, there's a lot of potential supply disruptions. You still have the issues in the Red Sea and everything else. So, there's just a lot of potentials out there, and this is where it gets difficult because a lot of time, and that's where pain trade is, where you go against that and maintain optimism, but then reality hits at a certain point. This is a hilarious one because oil is going to be driving higher. You've got that natural gas situation. Well, power, everything else is run off natural gas in Europe now because they faded from nuclear. Their green energy initiatives haven't done anything. So this is, obviously a clean central bank move to keep things afloat, because that contagion can spread quickly. And that's the real concern out there, is will there be enough in the Fed's war chest to be able to stem things? Um, from a gold standpoint, muted at this particular stage, but again, you're going to expect that to take off. The same with crypto, and that it's just there were a lot of other headwinds, and that built into what we talked about with the Bitcoin situation. It's just been trading between these algo levels, but as soon as you break out above any one of those, you're going to continue. But if you break below, likewise. And it's a mixed situation. You have short still active in this, but still, again, same thing with the magenta above. You have the potential for movement there. But again, when we look at our DOC, we always look for that orange caught between the two. If it dips below the 7.5, then I would say your likelihood for a little bit more of a bounce. And that's the same thing you can look on all of the charts that you have going forward. That's kind of a catalyst point. ETH these are all still playing between their 0 and 23 in this particular case. Yeah, it's just a back and forth. It was pretty straightforward, though, from 50K standpoint. We'd had that initial white spike that came up here that led to a move back once we broke below the 33 on the magenta right there. That led to a move back to the 50%. They did it again. This time the NBI white spike was a little bit softer, but once we dipped below, our signals went red, and then it was just a matter of waiting. And once you broke below the 25 and white overtook, that was the beginning of the real drawdown. And it was pretty clean. We got that dip way down here. What was that reading for DOC? Minus 23. And again, that created a little bit of a bounce back for it. But sustainable, potentially. You had the orange move across underneath here, but once that DOC steel comes back below the negative the positive 13.5, you'll move back into a negative run cycle on it. So this is all pretty clean. The paint bar has been beautiful with it, and this simply because manually, this is an algo situation, and it's just a matter of following what the color. Some of it seems counterintuitive, but that's just a lot of, again, that option play where dealers having to go in different directions to cover imbalances, and that drives huge volatility in this particular case because the numbers are so large. From an ES standpoint, you can see from a 5K, as soon as mid-morning rally came in the beginning and reached back up to the top, but wasn't sustainable, and once it got below the 50%, they just couldn't sustain anything, and that just led to selling the rest of the day. And that was pretty extreme because you were up nearly 100 points to fall all the way back down. That's quite a move. Here we can see in post-market they bring it back up a little bit, but it's having trouble sustaining itself even in the European session. I would expect more of the same. None of the uncertainties or incongruencies have changed whatsoever. And, where the Fed picks a backstop to support things, you're still at 5,200. There's nothing that's even dramatically close to a panic area. You were down at 46 or something, and this were taking place, that'd be a different story. But not at this level. This is just what I would consider normal activity. As you head into election year, you're going to just get a lot of volatility. Usually the bias is to the upside, but I think with the uncertainty of what's taking place as far as how things will go for convention and the back and forth of who's leading, not, that's going to have an impact because the trades are completely different for each of the candidates, and that does make a difference. So continue to follow it. As always, though, anything relevant, I'll put in the Skype chat. But just keep following the colors. As always, trade well. Have a good one.